Hello everybody. First of all, we're going to be talking about Bitcoin and its current decline or crash. But first, I'm going to say thank you very much to all my members for joining, and I hope you're enjoying the special member videos. And thank you very much for subscribing, those of you who've subscribed. And please like, comment, etc., because that's all good for me. Anyway, enough of all that stuff. Let's talk about Bitcoin. Well, Bitcoin went below 90,000 just now, and it's looking pretty bearish. And I've been calling for a crash for quite some time now. Back in the day, about a year ago, got out 100,000 and said, I don't care about the 20,000 upside from here to 120. I do care about the drop of perhaps another 60,000 from here. So goodbye, thank you very much. Anyway, hasn't crashed for the last 12 months, but now it seems likely that we're in that sort of period. Now, underneath all this is a cycle, and it's a 4-year cycle of boom, bubble, bust for Bitcoin. And we've all seen that over the years, boom, bubble, bust. When it goes boom, no one says, oh, here comes a bust. Nobody. Everybody says, oh, it's going to go further, it's going to go further, it's going to go to 250,000, 500,000, a billion, billion, trillion. Somebody said $21 million a coin. And even people that should know better say things like $1 million by Christmas. Also a signal that the top of the market is in. But the top of the market to me was always going to be around 120,000, 125, and it hit that exactly. But it stayed up well. It didn't go up like a rocket and down like a rock like Bitcoin normally does. It has hung around at that level for a whole year. But now it looks like we're in for the bust part of this phase. Now, that isn't fate. It could go back up again, but I think it's highly unlikely to do anything more than spike up and then slump down. So that's reason one. Reason two is that there's a liquidity squeeze out there right now, and that is caused by QT, or rather the end of QT. That was meant to be the end of QT, but the QT, I think, has momentum, and that momentum, like any super tanker, is going to take it into tight liquidity for quite some time. Now, the Fed does know this, and the Fed has been pumping liquidity in, but the level of the QT that's been going on for years and years now, I think probably has a little bit more, or perhaps even a lot more momentum than they was expecting. Now, you could say, no, they got that all right, and that's not what's causing it. The fact that there's no surplus money in the economy anymore, with the economy having got used to having lots of surplus liquidity, that's not what's causing it. What actually might be causing it, or intersecting with that, is the US government shutdown. Now, that shutdown meant that money has not flowed in the same way as it's been flowing before the shutdown, and that the reopening is not going to be instantaneous. So those two things together means that there's a really tight money supply. So you might say, what's that got to do with Bitcoin? Well, Bitcoin is the ultimate spicy asset that fast money goes into. And in fact, you only have to listen to Bitcoin people to know that they are wild gamblers. They even call themselves degens. So when the money starts to drain away, it will drain out of Bitcoin first, drain out of crypto first. I mean, obviously there'll be certain ends of crypto where it'll be draining out even faster. But ultimately, Bitcoin is crypto, and when the money drains away, when the tide goes out, Bitcoin is now feeling the effect first. Now, it's not to say that equities aren't under pressure, that silver and gold isn't under pressure because of this, that all assets aren't under pressure. But the frothy asset is Bitcoin. That is the one that's going to get hurt the most, because that is the volatile one. And that's what we're seeing now, in my belief. Tight money. There isn't the money to go play the Bitcoin game, so it's coming down in a lump. Now, whether people that have believed that it's going to the moon and shouting from the rooftops how it's going to change the world and them, they might run for the exits. Well, they have run for the exits. There's been a fairly large amount of people just bailing out. That's how avalanches start, that's how crashes start. And, if they don't pump a lot of liquidity in, which I don't think they will, they're just pumping enough to kind of stabilize the stock market, then Bitcoin is on its way down to between 40 and 60,000. That's my read. That's my opinion. It's not the law. It's just raw material for your thinking. Now, what I think is likely to happen is we're going to get wild volatility, but it's going to be up a bit, down a bit more, up a bit, down a bit more, big rally, big crash, but the overall direction will be down. In my mind, is a very strong chance. As I say, it's not fate. It's a very strong chance that we're in that crash phase that we saw the last cycle and the cycle before and all those other cycles that go way back to 2010. It's got to go down quite a long way from here, and I'm looking at 40 to 60,000. I think 60,000, yes. 50,000 probably. 40,000, well, I will be feeling that would be the bottom of this market, and then we will get a crypto winter. Now, something to bear in mind is the old saying, not your keys, not your crypto. And there will be, if this is a crash, there will be carnage out there in the institutions or sketchy Johnny-come-lately companies who pretend to be institutions, and that could be quite dangerous for people in the market. So bear in mind your counterparty risk and lower it where possible. And you know, if you've got cash sloshing about in someone else's account, you might want to bring it into your own wallet. So that's what I've done. But anyway, I don't wish to cry fire in the theatre, but we do seem to be on our way in the crash that well, we've crashed already. It is a crash. If it was equities, well, it's down at 28% from the high. In equities, that would be a crash. But I think a crash in crypto is at least 50%. And I think we are on the way there. And there will be, you know, institutional carnage. So it's best to batten down the hatches and make sure you've got your bases covered, or even your base covered for that matter. So thank you very much for watching. Please subscribe and like. And members, thank you very much for being members. And thank you for all those guys that have gone over and checked me out on Substack and gone and checked an UFN. That's really appreciated. And there'll be another video soon. Bye now.